Assalamualaikum warahmatullahi wabarakatuh and hi. We are from Group 2 and today we will be presenting about the revenue cycle. Processes involved in revenue cycle. We have 4 steps. First, in the sales department. Second, in the accounts department. Third, the preparation of financial statement. And last one, handing the unaudited financial statement to the auditor to be audited.
Okay, source of document that involved in revenue cycle. Firstly, customer sales order. That is a details of type and quantity of products. Credit approval form. Document that provide a result of formal procedure for investigating the creditworthiness of customer. Shipping document serve as a bill of lading that contains information on type of product shipped and quantity shipped. Sales invoice used to bill the customer. For example, customer will receive e-invoicing via email or via EDI. Sales journal used to record the necessary information for each sales transaction. Besides that, other is account receivable subsidiary ledger that contains an account and details of transaction. Customer statements contains the details of all sales, cash receipt, and credit memorandum transaction that processed through customer's account.
Entries and accounts involved in recording revenue-related transactions. So firstly, we have to record cash sales revenue. We will debit our cash account and we will credit our sales revenue account. So number two, if we have to record sales revenue in credit, we will debit our account receivable account and we will credit our sales revenue account. And if we have to record our customer advance payment, we will debit our cash account and we will credit our unearned revenue account. Next, if we have to record cash payment received from debtor, we will debit our cash account and we will credit our account receivable account. And lastly, if we have to record the sale of goods to customer, we will debit our cost of goods sold account and we will credit our inventory account.
Let's move on to the next slide, which is flowchart for revenue cycles. This revenue cycle will be start with sales department, which they will receive customers' order, and then warehouse will shipping the goods to the customer with invoice. After that, account department will record the revenue transaction based on performance obligation, and then the preparation of financial statement will be made. After that, they need to identify management assertion, which are divided into two. Assertion for transaction and assertion for detail balance, and the last one is handing the unaudited financial statements to external auditors to be audited.
Next, we look into the internal control risk area, management assertion and audit procedures in revenue cycle. The first internal control is distributing monthly statement to customer properly. This is because there will be complaint from customer about unrecorded monthly statement, and the management assertion that is involved is existent. So as an auditor, uh, the audit procedures that must be done to test the assertion is to review and test of entity procedures for mailing and handling complaints about unrecorded monthly statement. Next, shipping records reconcile with billing records. The risk area is revenue is not recognized when the goods have been shipped or performance obligation have been met. So the assertion that involved is completeness, and in order for an auditor to inspect the completeness of the shipping records is by reviewing the sample of shipping records and billing records reconciliation.
Okay, next assertion is valuation. The possible statement that might occur is the good is being shipped or the services is being performed at unauthorized price. So the specific department need to printing a list of change of prices for review after it was being authorized. And the audit procedure is inspection of prices on sales invoice with the authorized list of change of prices. Next is authorization. The possible misstatement is goods is being shipped to customer who have bad credit rates. Therefore, the sales department need to check customers' credibility before granting them a credit. So the audit procedure is observe sales department's procedure of granting credit. The classification assertion is for the possible misstatement that might occur is revenue transaction not properly classified. So the different type of products and services need to have a proper code for each product and services. And the audit procedure is they need to examine the sales invoices for proper classification of revenue transaction.
So the internal controls that are being done here is the sales invoice reconciled to daily sales report. So the possible misstatement that could have happened here, the revenue transactions might have been not recorded appropriately. So the suitable assertions that we can apply here is accuracy. This is because accuracy ensures the amount or related revenue transactions are recorded appropriately. So the audit procedures here is we can examine the reconciliation of sales invoices to daily sales report. This is to make sure that both of them are accurate. So next, we have goods that have been shipped are billed daily. So the risk area for this internal control is the revenue transaction recorded in wrong accounting period. So the suitable management assertions here is cut off. This is because cut-off assertions ensure that the revenue-related transactions are recorded in correct accounting period. So what could have been done by the auditor to obtain audit evidence here is by doing inspection of sales invoice and sales journals. This is to make sure that whether the dates are same or not. And lastly, we have disclosure of receivables that are pledged as collateral against specific loans. So the possible misstatements here is the shareholders will think that the company still have the ownership of the receivables. So the suitable management assertions is rights and obligations. And the audit procedures that could have been done is inspection of whether the entity provide additional disclosure about the collateral asset in the financial statements.
Okay, for the inherent risk. Firstly, existed. The possible misstatement that might occur is management will feel pressure to the misstated revenues in order to attract investors or to impress top-level management or the board of directors. So the control that can be made is a segregation of duties for filling out, shipping, and recording sales order. For the audit procedure is observe the process of documenting records, shipping materials, and recording of sales. Next is a cut-off. The possible misstatement is human error and recording the revenue at the wrong time. So the manager need to check all the documents that has been prepared by the staff to prevent any errors. And for the audit procedure is they need to examine all documentation related to customers and examine journal entries to check if there are any error.
This slide is referred to revenue case for group 2, which is Heraklion company cases. And we need to identify two methods for documenting the sales system, and one advantages and disadvantages for each method. For the first one, we choose flowcharts method, which a sales process. Flowchart shows the step and possible action and or internal control that accompany the sales of a product or service. The advantages of flowchart method is help Heraklion company to analyze existing sales processes effectively in a clearer view and making it easy for them to identify any missing control. And disadvantages of this method is if there is any modification need to be done, the flowchart need to redraw need to completely redraw it, and it can cause a waste of time. And next, for the second method, we choose narrative notes. A narrative note is a written description of client system that includes all processes that happen in each stage, as well as the internal control for stages. And the advantages for narrative note method is it is a simple method that is easy to be used by staff of Heraklion company and can assist other members to understand more and about the system. But the disadvantages of this method is it can be ineffective because the notes can be quite lengthy and hard to be reviewed, especially if client system is complex.
Next, we move on into the second question of our case, which is control deficiency and control recommendation in the sales system of Heraklion. So the first control deficiency is the creditworthiness of new customers is assessed by the sales staff. And because of the sales staff has their own monthly sales target, they might simply say that the customer has a good creditworthiness because they want to fulfill their sales goals. So the control that Heraklion can implement is Heraklion can pay external credit reporting agencies to assess credit data on new customers, um, in addition to using their own credit scoring system before get the approval from the sales manager. Next, sales staff has discretion to grant discounts on sales up to 10% for customer. The unreasonable discounts are given from the sales staff is simply because they want to meet their sales target. This will eventually lead to a huge decline in revenue for Heraklion. So the control that Heraklion can implement is Heraklion should set a limit of customers for the sales staff to utilize the 10% discount. And the sales staff need to get approval from person who have a higher authority such as the sales director or supervisor before they grant any discount to the customer.
Okay, the third control deficiency that we found in the case is the sales staff able to access and modify customer master data file to record discounts granted to customer without any permission from a responsible person or party. Then, recommendation that we suggest for Heraklion is Heraklion company need to limit the access to master data files so that only authorized individuals can access the files to prevent the figures from easily being tampered by the sales staff. Next, Heraklion company also need to segregate those who have the authorities, access of record, and those who have custody over assets to prevent anyone to simply had access to records. The last one is sales order number to be issued for customer's order is based on the salesperson own identification number ID. As identification number is non-sequential, it is difficult and complicated for the company, it is Heraklion company, to track missing orders and to ensure all orders are being delivered successfully, which can cause loss of clients' trust. So, what Heraklion company need to do is they need to provide a sequential identification number for customers' order so that lost order can be identified and easier to keep track of all orders delivered in a timely manner.
So the fifth control deficiency here is the copy of customer orders form are only retained by the sales staff and not by the Heraklion company sales department itself. This is not good because the sales department are not able to monitor whether the goods have been successfully delivered to the customer itself. And this can cause a huge decline in Heraklion company revenue, and it also can cause a loss in customers' trust. So what we recommend is the sales staff will need to hand over a copy of the pre-printed form to the sales department, as the sales department will need to prepare the sales order on the customer's completed form. We also suggested that the Heraklion company should at least have 4 copies of forms to be used by the departments in Heraklion company. Next, the sixth control deficiency here is the salesperson does not check the availability of inventory during order placement by the customers. And what's worse is Heraklion company claim its ability to deliver every order made just within 3 business days. So the control recommendation here is sales staff need to check the availability of goods in inventory list first before finalizing the order with customer.
The final control deficiency that can be identified from this case is the salesperson emails the finance department and warehouse dispatch team with the customer ID and the sales order details rather than a copy of the sales order itself. And the control recommendation for this deficiency is instead of sending emails to the finance department and warehouse dispatch team about the customer ID and sales order details, the salesperson actually can forward the form that has been filled by customer to both departments to prevent from salesperson unintentionally do mistake when preparing the emails.
Next, the third question is describe substantive procedures that the auditor should perform to obtain sufficient appropriate audit evidence in relation to Heraklion revenue. So the first substantive procedures is compare reported revenue of Heraklion for current year and previous year to investigate if there are any obvious increases or decreases in revenue. Next, examine whether the reconciliation of sales invoices of Heraklion is accurate to its daily sales report. Third one, calculate and compare gross profit margin of Heraklion for current year and previous year with industry data to examine whether there are unusual fluctuations. The fourth one, compare inventory turnover ratio for current year and previous year to check whether there are errors in the accounting records if the differences is too high. That's all from us. Thank you.